Nvidia ended the day up 4%, and as of right now, everything that we've expected is going according to plan. We've seen price bounce off the support level of $94. We've seen price move back into the market bias, and I do believe that while we could see maybe a high of 115, 117, maybe even 120 in the next week and a half, I think we're going to see price sell off one more time back down to $95. You're going to notice that if we look at the daily chart here on Nvidia, price is currently trading underneath the market bias. That is this red line indicator here. It looks like a tape. And when it is showing red, it means that we are in a downtrend. This means that in most cases, price will push up, make lower highs, sell off, make lower highs, sell off, make lower highs, and continue to move its way down. So as of right now, we are in a contraction in the market. Now, for those of you who understand market structure, if we actually zoom out and look at the overall trend, you're going to notice that we're still in a longer time frame uptrend. If we take a horizontal draw tool and we mark off our most recent high that has not been taken out, that's going to be up here at $140, and you're going to see that our low is here at $76. So if we take a Fibonacci retracement from that low up to that high, and we pull it all the way out, this is going to show us what current market structure looks like. You're going to notice the area I mainly focus on is this level between the 0.786 and the 0.618. This is called the institutional level, and this is normally where we'll see big money start to buy as we're in a long-term uptrend, but pulling back in the short term. The area which is your most optimal to enter is actually between the 0.786 and the 0.826. This level is called the smart money level. And in most cases, when price falls into this institutional buying level, we will see it quickly get bought up. In most cases, though, we won't see a complete break right back up to highs. We will normally see one more push up, followed by a rejection back to test this institutional level one more time, worst case, maybe in the smart money level from 90 down to 87, before we see if that is actually the floor and price can bounce off of that level and start to trend back up. You're going to see that the institutional and smart money levels that we talk about are always going to be represented by this weekly market bias. And if you want to learn how to trade this market bias indicator, my exact indicators, and how we were able to close over $1 million in profits so far this year, you can go check out the free market bias course that I have in the description. It's a completely free indicator on TradingView. My exact settings are not the base ones, so you will need to access that course to make sure that you have the right settings, but it's completely free. As of now, I still think that we're going to see Nvidia back in the next couple of months trading between $128, $132, and $140. But I wouldn't put it past us in the short term to make one more rejection here back down to $92. As of now, I am not opening any puts unless we push the upper limit of $116 to $117.50. If that happens, I will then look to short up at that level, set a stop loss at a higher high, set a take profit back down inside of the golden pocket to the bottom, so realistically somewhere about $95, and that would give us a 3.5 RVR if we wanted to take a short position. The main reason I'm not a huge fan of shorting is simply because we know that if we zoom out to the weekly chart, that while we're in a consolidation, we are still in a strong uptrend. And we've seen price has bounced off of this level each and every single time for basically the past 2.5 years. I hope this video helps, guys. If you want to get access to all of our courses completely free, the link to all of them are in the description. Thank you guys for all of the support, and I'll see you next time.